All right, what is going on, Discord and YouTube family? Welcome back to another edition of Market Review with me, T. Hobbs. Today is Tuesday, August 12th, 2025, year of our Lord, and we will be reviewing the S&P 500, the Dow Jones, the NASDAQ, and RTY, which is becoming a little bit of a crowd favorite in here. So, first and foremost, I hope you guys had a good trading day. Man, it was beautiful price action, and the pre-market plan was super saucy today, right? I was a little off on my conditions of the market, but I definitely gave you the opportunity to say, hey, this is what I'm expecting to happen. So let's just jump right into it. So the current conditions, we were in the markdown phase, or you could call this a bearish retracement of a bullish trend. To be honest, that's what I had first. And then I just was like, maybe this is the markdown phase. But markdown, we not really in markdown until we break this trend. And we hadn't done that yet. So, but the bullish above and bearish below is going to give you the range, right? So we were bullish as long as we stayed above 63.69, right? Which was down here at this low down here, right? This is the base of the dealing range, right? So this low to this high, right? And then we were bearish as long as we stayed below 64.3150. And you can see right out the gates, we definitely got above 64.3150. I said bears finally defended the highs, which was up here, and I would say barely. But as long as the VIX continues to rise, I will look to continue to look for more downside. Well, just real quickly, just as an aside to that question or to that comment, look at the VIX, right? Does that look like it continued to rise? No, right? So if the VIX wasn't going to rise, then everything that I'm saying is the opposite, right? We appear to have made a high of day in London, which is something I see inside of consolidation. So as long as we are below 250, 310 macro, we should remain bearish. CPI news will bring more volatility, so I will look to participate inside the 4-hour close, all right? So this is my thought process going into the market. Now, remember, none of these candles have taken place as I'm talking about the market, but this is just my thought process. This is what I'm going to do. This is my mechanical way of looking at the market, right? So the PM range, look to short the highs of the range, which is the red box. Look to long the lows of the range, which is the green box. The high is 64.2750 to 64.0275. The low, 63.90.25 to 63.69.25, which again matches our levels up here, okay? And then we had an overnight chessboard high and chessboard low. I didn't draw this till later when I was at the barbershop, so I don't really have those ranges, but you can see them on the chart. So the only places that I was looking to short the market and be a bear would be right here inside of this bearish supply. And you can see what the market did to this area, right? It just straight up baptized this area. The last area would have been up here, which is the projected data high at 64.82 through 65.06. And, the market should be looking to target this next. Just depends on how far we can get going on the day. Our bullish plans to the extreme side, I wanted to see the market tap back into the 1-hour fair value gap, the 4-hour support, or even better, all the way back down to this RTH gap that everybody seems to be taunting. And none of that happened, which leads me to my trades on the day, right? So trades that I took on the day, again, I wasn't available for the live session, but I'm still making the pre-market plan. And as I'm getting dressed or my child's getting dressed, I come in here and I take a trade, right? So this was the ultimate freaking setup, okay? I'm gonna take everything off my chart. I want you to just take a look at this setup, okay? So whenever we talk about setup, we have to understand the dealing range from the day before, right? So what is the dealing range? Remember, Monday usually sets the range for the week, all right? Monday came up higher, which is an indication that we're going higher because we're making a new high, okay? And then it traded down lower, running liquidity here, liquidity here, liquidity here, and liquidity here, stopping before we brand the ultimate low of the previous dealing range. This is the definition of a run on liquidity and coming right into the previous high. Like, this is textbook. So when I woke up, right, I didn't even watch the market close because screw the market when you have a bad day. Like I had a really bad day yesterday. So, but it's fine. I'm completely over it. The second I saw the market close and I saw this big candle come in, all I was waiting is for, if I woke up and the market did not take out these lows, that means that we're not trying to go higher. I mean, we're not trying to go lower. We're going higher. Even though 350, 410, remember, this is where I used to get mixed up. And I'd be like, well, London brought high of day. It's like, well, we're really consolidating though. So what did we do from this low at Tokyo's low here? We brought a new high. We came back down and held these lows, and then created a new dealing range. This is the high. This is the low of the dealing range. The market comes back down inside of London or inside of New York pre-market, sets the 730 low, gets above 730 low, and now we're making higher highs and higher lows. I actually bought the low of this candle, the 8 o'clock candle, because I missed the low down here. I bought the low down here like a couple times. So I was in 3 micros, I added 3 more, then I added 3 more, and then the dance happened right before the news broke. And then I caught this entire rally all the way up here, right? Could have got back in, but I had to, my wife was looking at me funny, so I had to get ready to go take my son to get his haircut. So, but ultimately, the reason why I call this the ultimate setup is because whenever you can get the market inside of a strong uptrend, whenever you can get the market to sell down to a very key level, and we'll bring out our levels right here on the pre-market plan, right? Oh wait, that's the pre-market plan. I want to bring out the top-down analysis. Wait, what did I do? Did I delete some shit? Oh, I know what I did. I'm stupid. Give me a second. There we go. All right, so we go back to our pre-market plan, and again, I'll take this part off because I'll explain that part later. There we go. All right, so we go back to our pre-market plan, and what does our green box represent? Our green box represents the PM session low. I call it the chessboard for my own personal reasons, but let's be clear on what it represents. It represents the low of the previous PM session, okay? If the market's not giving up the PM session, then that means every other session after it needs to play off of it. If every session, right, from PM brings us Sydney and Tokyo, right? So Asia. If Asia comes into the previous PM session, the result of Asia is a higher low and a higher high. Well, okay, let's see what London does. London comes into Asia and makes a lower low and a higher high. But from the PM session, it's making a higher low and a higher high. So what do you think New York is going to do? Okay, we come into New York, we make a lower low. What do you think is going to come next in relationship to the PM session low? Because although these are lower lows from the previous session, they're still higher lows from the previous session that started the lows. And every single one of those sessions prior to that has made new highs. So when you see that, you know now you're in discounted pricing because you're below the daily fib. Remember, the daily fib is the 50% mark. So if you're below the daily fib intraday, you're already below, you're in discount. Okay, this red line right here, midnight price. Now to start the day, midnight is your equilibrium. So below midnight, guess what? You're in discount. So there's 3 or 2 things that are telling you you're in discount. That means that this is the freaking buy of all buys. Not only that, we break the high and then we come down here and we get the perfect double bottom. If I was here for 63.92, this is the buy, but I wasn't. So I bought it up here. I'm fine with that as long as I'm risking down below this low here. This low, 63.87, was my stop. Why? Not because it's how much I can afford, right? Yes, that's part of it. Not because, I don't want to get stopped out. No, this is where the trade is invalidated. So as long as I'm above this level, I'm right? Like I'm in the direction of price, period. Right? That's what the invalidation point is. Fuck a stop loss. Do you know where you're invalidated at? Right? Because if you know where you're invalidated at, you know where you should be entering, and you should know how much you can risk in order to be invalidated, right? Because if I'm wrong, the market should go the other way, period, point blank, and it did. Okay. Now we go into the actual price action of the New York session. For that, we're going to drop down to let's go down to the 2-minute time frame, right? That's a much cleaner time frame. So we go down to the 2-minute, and again, we just follow macros, right? At this point, 859.10. You guys know I love to take shorts off of this level, right? And when I'm going short off this level, it's just a scalp back into these lows, right? Because I understand what's happening here, right? So then we rally back up, and we dip down. The reason why I wouldn't be looking to buy here just yet is because I want the break and retest, and we'll bring out the pre-market plan, right? Because it's the last step of the chessboard high and low. Let's go to the pre-market plan, and I want to clearly illustrate what I mean when I talk break and retest of the highs, okay? This is our pre-market plan. Inside of this area, red box to green box, I'm looking for to short the high and low of the range, and then B&R from high to low. B&R means break and retest. So if we're in a downtrend and we break the green box, I'm looking for retest to short lower. We're in an uptrend and we break the red box, I'm looking for retest to go higher. All right. So now that we have that context, let's go back to the 2-minute chart. Okay. And let's see what we get. We get a clear break with the CPI candle right there. That's a clear break, right? And then the market flirts with the retest idea and makes you feel like you missed it. So then it's going to rally up to fake you out. If you don't buy here, or even if you buy here and you're greedy like me, you try to hold thinking this is just a pullback, right? And then it dives into where you really want to buy it. Me personally, which is why I wrote in my pre-market plan, I will look to participate inside of the 4-hour close, because where's the 4-hour going to close? 9:50, 10:10, and right at 10 o'clock, look at the buy right there. Directly off the pre-market plan at 6 o'clock in the morning, I told you not only the time, right? The opportunity, I told you the exact level and area that I would be looking to buy. Break and retest off the chessboard high at the close of the 4-hour candle. We tapped into the daily fib, discounted prices, swept it, and then kept going. And this was the buy you could have stayed in basically all day long. Now up here, there is nothing to really talk about. It was just trending price action. So let's move over to RTY. And again, I don't draw a pre-market plan for all of the other instruments. However, what I do is if you look inside of the chart request section of the Discord, I put purple lines on the highs, the lows, resistance zones, support zones, 4-hour levels, whatever, right? Areas of interest. And what you can do is you can read my pre-market plan for ES and know that that's the exact same way. If I were you, I would trade your particular instrument, right? That's what I'm putting those levels in there for. So let's go through that same thesis, the same scenario here. Let's look at the 1545 candle. Look at that. Look at that big wick right here. Let's zoom in so we can all see it, right? I want you to see this big ass buyer that came in. I don't need to look at order flow. I don't need to look at liquidity. I don't need the DOM to know that there was a big buyer that came into the market at the close and bought RTY up 40 ticks. Okay. That means that as long as this guy is in profit, right, and nobody's buying or selling underneath him, we are going to go up, period. Right. So then if you needed further confirmation, look at the candle at 12 or at 1 o'clock. Look at these buyers that are coming into this market. Aggressive buying followed by a break of the high. We come back down and right into the chessboard low that we draw at the close of every day. So this is not something that I move up. Y'all see me chart this every day, literally every day. Where does the market go? Right into the chessboard low, right? And then ape shit, right? RTY was gone before the CPI candle even came out. By the time the candle came out, we were here. We were already 16 points up or 11 points up before CPI, right? And then CPI just took it to the moon, right? You got a pullback, but guess where you pull back into? I wonder, right? Right inside of the chessboard low, guess what time? Right at 9:30. And then you got the pullback of that move at 10 o'clock. Either one of these was a buy. And then it was just go time from there. RTY, when you get a slingshot like this, on a day when you get a catalyst like this, these are days, shout out to Pip, because I ain't doing the shit, but I can tell you just from watching him trade, right, or seeing the way he hold trades, these are type of days when you get a catalyst that strong, the market ain't coming back, right? It's not coming back. So take profit along the way, pay yourself, but you could basically hold this shit all day, right? Because the setup structurally had every single nuance you could ever ask for out of a trade. There was one short on every instrument. And then after that, night time, right? So moral of the story, work on your craft, do the back testing, right? And ask as many questions as humanly possible. For God's sake, you're paying $40 a month to be here, right? And I know it's not a lot of money, but you paying money out of your hard-earned check to be here. If you're not learning out of this Discord, that's on you, period, point blank. I hope you're watching this video, and I hope it pertains to you because we're waiting on you. We want to see you grow, but we can't help you if you don't show up to the show. You feel me? So moving over to the NASDAQ, okay? Same thing. I mean, this is going to be like Groundhog's Day, right? Like you would think, Hobbs, you're making this up. You charted this right before the session. I would beg to differ. I will mark my levels the night before, and you could go check them the night before. It's not going to matter because the range is the range. It's not me that's great. It's the market that's efficient, and we've just figured it out, right? So we get the same. Let's go to the 345 candle, right? Or over here was 355. Big buyer came into the market, right? We go to the 15-minute chart, probably left behind a huge wick. Let's go over there. Yep, right there. Right at 45. See that buyer that comes in right there? That's exactly where I drew. I think it was Ziggy that was in here. Ziggy and Spooky were in here last night. And I said, hey, look, you see this consequent encroachment? As long as we stay inside of that, it's go time. Go time. Ziggy sent me a picture in the middle of the night laughing because I already knew what he did. As soon as he saw this candle come down, he was like, oh, go time. Made his money and he didn't even trade the rest of the day. Man, now, hindsight being 2020, he probably could have held this shit all day. But, that's neither here nor there. But anyway, market comes down right inside of 6:50, 7 o'clock. Boom, rally time. Just like RTY, it rallied even before the CPI candle, right? And again, right at 10 o'clock, right off the 10 o'clock candle, that's the bottom. It's time to go. All day hold, right above all-time highs, right into our next data high, which again, we drew this level on Sunday, right? Why is the market going here? I'm not a magician. I just understand the math of the market, right? I understand how to take an average, right, out of a median, and like, you know what I mean? Like, I know how to find the median in regards to price action. I will show you all of that. There are videos that covers all of that. I am not a gatekeeper. I want you to know this information because I want you to change your family's life, right? And here you can do that, right? We will fuck up. I fucked up yesterday. I blew a funded account that was up a lot more money than I would love to lose, but that wasn't really my money to lose, right? I don't give a shit about that shit. Ultimately, why did I blow it? I blew it because mentally I'm not fully disciplined yet, but I'm getting there. Part of that is just accepting who you are as a person and then working through those disciplinary factors. So let's move over to the Dow Jones. Again, this is going to go quick because again, I mean, what do you want me to say? Like, what do you want me to say? Like below midnight, below weekly fib, sold off all day, double bottom, 3 o'clock, CE of the candle, buy, right? Out of here. Where did it pull back from? Well, it pulled back into the chessboard high, right into the daily fib, just like its counterpart on the ES. As soon as it found buyers here at 207, bye-bye. See you later. All day hold, right? So ultimately, this is a textbook day. Will every day be like this? Hell no, right? Hell no. But on those days that aren't like this or aren't as clean as you think they are, and this is me talking to myself while talking to y'all out loud, if it ain't what you think it is, get the fuck out, period, right? Leave, because there will always be another day. There will always be another trade. There will always be another week. There will always be another month. There will always be another catalyst. These motherfuckers they will never stop spending, guaranteed. All you got to do is be smart enough not to blow it when the easy money come around. And today was easy money and I missed it. That means that I didn't get to go and make 20, 30, 40K to get my wife a car. Today was it. Today was the day that I could have made a ton of fucking money, right? But I blew it because I lost it yesterday. But that shit won't happen again, right? It's another one on the belt, another little learning token that I put on my belt. So that's all I got. Again, sorry for the little bit of rant on the end, but again, if I need to hear it, I guarantee somebody else in this motherfucker need to hear it. So that's all I got. My name is T. Hobbs. This is the Market Review, and I'll catch you guys on the next one, man. Peace.